Guys, weekend's here. Keith at Crypto Bullseye, and I'm bringing you an update video today on Kadena. So Kadena, it's done something that it hasn't managed to do in 100 days. It's finally broken out of its range. 100-day range, we've had a break, and question on everyone's mind, is this break real? What needs to happen next? And have we got any conviction behind it? Okay, Kadena trading at 64 cents, 0.6432. I'm going to try and slow things down a little bit on this, guys, because I've had a few comments in the Discord about how you can use certain metrics to give indications that you've got conviction behind your move. So we're going to use those metrics today, and we're going to use probabilities to decipher what chances that we've got of Kadena having a move to the upside, a strong move to the upside, and for this level of support to hold. Previous resistance for 100 days, we expect it to hold. If we expect it to hold, we expect to go and test the previous lower low. And if we test the previous lower low and we manage to beat the previous lower low, that's showing an indication that the trend's reversed. So that's what we're looking for, guys. We're looking for indications of trend reversal. One thing about trading, 90% of traders lose 90% of the capital in the first 90 days. And let me tell you something about counter trend trading, and let me tell you something about trend following or trend continuation. You've got a higher probability of trend continuation. You've got a higher probability of trend following because the trend's your friend till the bend at the end. When you're looking at these moves here, counter trends, they can be a nightmare. The bulls don't know who's in control. The bears don't know who's in control. We're in an accumulative phase, and we need to just look for clues. But one thing that it does mean, though, guys, it means you can protect yourself a lot more than the ones that have pumped. The ones that have pumped, everybody, retail, have been buying the pumps. Retail have been buying the pumps, and you can tell when you look at the rest of the crypto market, you've got some big movers here. GOAT 30% on the day, HBAR 26.8% on the day. You look on the week, even bigger. You look on the month, even bigger. So we can see that Kadena, it's lagging in comparison to the rest of the crypto market. So are we fearful? Are we greedy? Why is this important? We look at the fear and greed index. Guys, I'll tell you about 90% of traders losing 90% of the capital in the first 90 days. Let me tell you something else about bull markets. We're going to go through some emotions within these cycles. Extreme greed is going to be one of them. The market's in extreme greed at the moment. The market's in an unhealthy phase at the moment because the price is just going up in a straight line. It's not healthy. We need a pullback. We need indicators to reset, and we need more conviction for another big move to the upside. So just be mindful, anybody that's buying pumps and buying pumps and buying pumps, when you get that nasty pullback, that's going to hurt you. So just be careful and make sure that you use the appropriate risk management and protect yourself. So that's the fear and greed index, guys. When we get in extreme greed, we get these pullbacks into fear. We get the pullbacks into fear, and you get them every time. So it's going to hurt you, guys. It's going to hurt you. A lot of the time, people that are new to crypto as well, when you're buying pumps and then you get that nasty crash to the downside, people think it's over. People sell at the bottom. People buy from them people, and then they'll buy again at the top. So it's all about emotions, guys. Subscribe to our Discord group. We keep our emotions in check there. And speaking of the Discord group, got a guy in there, Benton, absolute legend. If XRP hits $5, then I'll streak naked on a live. And we are going to hold you to that, Benton. So back to Kadena. Right, okay, so we're going to look for indications to find out how and when can we take on this previous lower low, and what conviction have we got behind the current move, this break here. First thing that we need to do is bring up volume. You can see this volume. What can you tell from volume? When you get a big volume spike like this, and this big candle here, that's showing conviction of a big break. That's showing that you've got, the bulls have got the momentum behind the break. So we've got similar here, but on a smaller scale. You can see the momentum is building up on volume, We've managed to break. We've come back down. We've managed to retest this previous area, and we're holding this area, and we've had a strong bullish candle on the day yesterday. So the next thing that I'm going to look at is this, the 200 daily moving average. One thing to consider, if you're above the 200 daily moving average, you're bullish. If you're below the 200 daily moving average, you're bearish. We're above the 200 daily moving average. So what can you do, and how can you use this as a buffer zone? Because the 200 moving average is going to be your base before the bull run. So this potentially could be the bottom if this holds. It's a couple of things that need to happen. How can you protect yourself if you're trading this? If you're trading it, guys, it's all about preservation of capital. It's all about risk management. It's all about where are you shooting to and how much are you risking? So if you shoot into, just an example, we're shooting up here, 49.9%. This is hypothetical. And then you've got your protections here below the previous swing low. You've got this 200 daily moving average as your buffer that's going to act as support. And then you've got the previous lower low that's going to act as, previous higher low, should I say, that's going to act as support. So you can draw a trend line on here. And you can say, in the short term, if this level is lost, I would expect price to get cheaper. And if price gets cheaper, I want to be stopped out with a minimal amount of capital to take advantage of those cheaper prices. That's the method behind the madness. Right, okay, what else can we do? Stochastic RSI. Stochastic RSI, one of my favorite, most simple indicators, guys. Let's get this up. Let's get it up. Right, get rid of the RSI for now. Don't want to overcomplicate things. All we need to know in the stochastic RSI, people that watch my channel are already going to know this, but how can you use it in conjunction with price action to give you that conviction that the bulls in this instance are going to have control? So what we're looking for, guys, it's as simple as this. Let me just pull this up. What I'm looking for is as simple as this. You've got your line here, above 80, overbought, as simple as that. You've got below 20, oversold. When you're in a bullish trend, we're interested in oversold. We're interested down here, and we want price to be holding support whilst we're down at this level here. So as an example, you're down here, we're at support on this trend line here. That's showing an indication that as the stochastic comes to overbought, as the stochastic comes to overbought, we want to be taking out the previous high and we want to be making a break. So that showed us conviction. Now we've got to look, we've got to reassess what's happened. Overbought. So we want a pullback on the stochastic. Now, this is the strong thing, guys. This is where you get real conviction. If you get a pullback on the stochastic and you're pulling back to support, the stochastic's oversold, sorry, at the bottom, oversold, and you're holding this support level, that's given you such high conviction that you're going to take out the previous high, stochastic's going to go to overbought, and that is your two indications. If you've put in a new high when the stochastic's overbought, and then you've pulled back at support when the stochastic's oversold, that's giving you a high probability that the move's going to go your way. When do these things really work? When you're really trending. When you're really trending, putting those higher highs, putting in those higher lows. Add your trend line on there. How do you use your stochastic with this? Stochastic overbought, you're waiting for a pullback. When you're at support, stochastic oversold, looks good. Stochastic overbought, wait for a pullback. Make sure you're putting highs in when it's overbought. Make sure you're putting higher lows in when it's oversold. That gives you such high conviction, guys. It shows strength for the bulls. So there's just a few simple techniques that you can use there just to give you a couple of additional rules, a couple of additional confirmations that what it is that you're doing is the right thing. Because at the end of the day, guys, the markets are just probabilities. We can look left for clues. Markets rhyme. They don't repeat, guys. So we can look left for clues. We can add probabilities, but ultimately markets will do whatever the hell they want, guys. So you need to ensure that you protect yourself. Right, okay, that was Kadena. So I'm going to be doing another update video on ICP later on today. So stay tuned for that. Get yourself in this Discord group, completely free. Link in the description below, and I'll see you later.